as we've just headlined that South Africa is now in technical recession. What does that mean? Well, it's after the economy shrinks for a second quarter in a row. Stats SA has announced a 0.7% decline in growth. Let's wander across to talk to business anchor Devin Murrigan. And this runs counter to conventional wisdom, because if you were looking at the overnight previews, people were saying we might escape this.
Yes, indeed. They did warn, although we escape a recession, we're still in dismal growth, Jeremy. I mean, it's like saying, what's the difference between manslaughter and murder? Well, the victim's still dead, isn't it? And that's a good sort of example to sort of tie in with the economy. Although, if we did escape a recession, we still have meager growth that simply cannot produce the employment that we need in this country. If I could just very quickly illustrate how these numbers came in this morning. Here we go. In the quarter one, we initially said we had a growth rate of minus 2.2%. That's a contraction. Well, that has been revised now. The first 3 months of the year, we actually grew or shrunk worse than we expected, minus 2.6%. Then comes the second 3 months of the year, April to June. And as you said, Jeremy, we had thought that perhaps we'd have a little bit of a positive growth there, escaping the recession. That didn't happen. Stats SA saying that for the second 3 months of the year, we actually contracted by 0.7%. What were the big contributors here? When you look at agriculture, that grew by minus 29%. That's a contraction, of course. Then your transport sector, just under 5% of a contraction there. Trade, under 2%, also contracting. So again, you wonder why President Cyril Ramaphosa is going around trying to encourage investment into the country. This is a big reason. We have to get the economy active if we are going to create the jobs. Okay, so what was the initial knee-jerk reaction to this? Well, the graph says it all. Take a look at this. This is the rand to the dollar rate, and come 11:30, around the time this GDP figure was announced, you see that huge spring that hits up with the rand value against the dollar. Not up in this case, but exactly weaker against the US dollar. Moved up to 15.25 at one point, recovering somewhat. And of course, you'll know that when a rand is weak, as Michael Morelli will tell you, it just hurts the petrol price. Let's go straight into the indicators now, and we start with the rand. Of course, as we said, plummeting on the news that the country is now in a recession. It sank by 2.5%, as we said, 15 rand 25 cents at one point against the US dollar when the news came in of our shrinking economy. So there was the rand sell-off that happened. And remember that the rand was already in deep trouble because of this emerging market situation where a basket of these currencies were already being affected by the strong dollar. Let's very quickly take a look now at your commodities. That strong dollar having its effect on gold. Gold inching lower, hitting 1 week, with the dollar hitting that 1 week high due to intensifying global trade tensions and economic worries in emerging markets. Gold price 1,194, platinum 775, and again, the last price there is a price you've got to be worried about, more and more closer to the $80 mark. And I speak of the Brent crude oil price. That's also a big factor in determining the petrol price. So where does all of this leave your JSE and the all share? If you have investments there, you'll be watching very carefully. 1/3% down this afternoon, as those stocks that are sensitive to a weak rand are hit. As we would have expected, banks and financials in the red. They are down by 2.1% this afternoon.